Prasad, the Senior Executive Director and Co-Head at Kotak Institutional Equities, joins us now to talk about the markets as well as all the triggers that are lined up here on. Sanjeev, hi, good morning. Good to speak to you as always. When we spoke with you last, there was that conference going on. But from here on, what is the expectation as far as the index itself is concerned? Because, we are seeing a slight amount of turbulence around the 79 to 800 to 8,000 mark on the Nifty. What do you think the trajectory could be?
Well, I guess in the short term, there are too many moving issues as of now to really take a firm call. On the one side, if you look at the positive side, you're seeing some momentum on reforms. Government has done small reforms, in several sectors in the last 2-3 weeks. Hopefully, we'll see some progress on GST legislation in the current ongoing winter session of the Parliament. And beyond that, honestly, I can't see too many positive figures for this market. If you look at other side, clearly you will have this Fed event, on 16th and 17th, and most people are penciling in some increase in the Fed rate. If it is followed by dovish commentary, then I think you could see some rally in EM markets based on some risk appetite coming back into the market. But with just a normal increase which people have factored in, I don't think things change too much. Beyond that, if you look at earning numbers, I still see one more quarter of earnings downgrades. As of now, I think most of the street, including us, has penciled in somewhere about 20% growth for fiscal 17. And I see some downside risk over there, about 3 to 4% cuts could be there. On the monetary policy side, I don't see much of scope, at least for the next 3-4 months, given inflation trajectory and the stated policy objectives of the RBI. So, it's really a mixed bag in terms of, what the market can do over the next 3-4 months. Some positive factors, some negative. So, I suspect it's going to be range bound in a reasonably narrow range for some time.
Let's talk about the potential positive triggers, Sanjeev. If the GST bill is passed by the Rajya Sabha as well in the coming winter session, how much of an upside could we see on the markets?
The way I would look at it is, it's something which is probably required to sustain this market at current levels. If you see anything negative happening on the legislative side, once again, what you saw in the last monsoon session of Parliament, then this market will come off. On the other side, GST is something which is now getting priced in. People are reasonably hopeful based on the dialogue between the BJP, the central government, as also the Congress party, and hopefully things will move ahead over there. But clearly the thing which is required in this market is clearly earnings growth, and that is still an issue in the sense, you're still seeing earnings downgrades, and that will continue for the next 1 quarter or so, I think. So, GST, I think, is something which people will take in their stride. It's a sentiment positive, but do keep in mind the fact that the implementation is probably not going to happen before April 17. There is still a lot of legislative process needs to be gone through. So if anything, the benefits will come earliest in fiscal 18, I would think.
Okay. Let's talk about some sectors now, Sanjeev. There is one theme that everyone is betting on, at least 9 out of 10 people are, which is a revival in the urban consumption theme. So whether it's the auto stocks, whether it's the cement names. Today we saw a positive report on the home improvement theme. How do you play this theme now? Do you still continue to look at, the ACCs, Ambujas, Marutis of the world, or do you now start to look outside the index where more value can be found?
As far as cement names are concerned, the valuations are way too expensive. Even if you build in a very strong improvement in profitability, the stocks are still trading at pretty, expensive valuations. So I'm not really excited by the cement sector. Yes, demand will pick up as we go along, but as of now, real estate / construction activity is still quite weak, and I think that will continue for the next 2 to 4 quarters. So I don't see any great revival on the real estate market anytime soon. People have built in a very big improvement in profitability in the cement sector, and we have been seeing that for the last 2-3 years now, and invariably the numbers disappoint. So let's see what happens on that one. As far as auto is concerned, we are slightly more constructive over there, more positive on stuff like Maruti, Bajaj, etc., which we have been positive for some time now. Having said that, again, the volume growth will be quite decent in fiscal 17, given obviously the positive impact of the 7th Pay Commission recommendation, which is probably going to be accepted by the government any time now. But beyond that, if I look at the negative factors over there, one is, the very high assumptions which have been, very high margin assumptions which have been built by the street in terms of EBITDA numbers. And that is something which I worry about. If I look at Maruti, for example, most people on the street are working with something like 16-17% EBITDA margin for the next 2-3 years now. If you look at historical EBITDA margin, it's been more in the range of 10 to 13%. So whether this kind of EBITDA margin sustains, which is obviously in the back of lower commodity price or not, that remains to be seen. So yes, you will see volume growth picking up. That is there in the numbers, but on the other side, whether the profitability assumptions which have been built in sustain or not, I'm not very sure.
But apart from lower commodity prices for Maruti, there is this other argument that now many of their newer products are high margin products, the more premium products like the Balenos, the Ciaz, etc. So automatically their margin profile will increase. Wouldn't you buy that argument?
I am not very sure that is a correct way to look at it. Actually, the margin is more a function of what kind of volumes you are doing, and in most cases, these are not going to very high volume products. So, and these are also segments where Maruti is really putting a lot of money in terms of investing and building the brand, etc. So, I am not very sure whether Baleno would kind of have the margins which I desire and Swift have currently.
Sanjeev, when we last spoke to you on the auto sector, you also told us that Tata Motors valuation is very attractive. But at that time, it was trading at levels of 350, 360. So since then, it's rallied 10-15%. Is it still looking attractive at current levels?
No, we're still okay with Tata Motors. I think the stock can probably go up to 470, 480 kind of number, and then we will review the call. As of now, we are still comfortable with the valuations.
What about the pharmaceutical sector? Because stocks like Dr. Reddy's, Lupin, Sun Pharma had corrected anywhere between 15 to 25% in the last month, that's in November. Did you dabble and buy any of the pharmaceutical stocks given the kind of correction that we've seen in frontline names?
Not yet. The problem with these names is if we have negative news flow, it's not as if these are going to change immediately. A warning letter is a pretty serious thing, which means, this is going to take some time to resolve, probably a year or so, which means, the company loses momentum in terms of introduction of new products are concerned. Clearly, the FDA approvals are not going to come through on time. And whatever is the pipeline, you could actually see a lot more competition now because the whole, the launch gets delayed quite significantly, and you could actually lose some of the opportunities which are out there. And so in terms of pricing, that also becomes quite critical because, the moment you lose exclusivity window, there is obviously a pricing pressure which starts building up quite significantly because, let's say in the exclusivity period you were selling at 100 rupees to the unit. That number could come down to somewhere about 10 or 20 rupees once you lose the exclusivity period. So that's the real big issue for these companies. The second thing is, if you look at earning numbers, obviously the street has downgrade numbers now. Still, I'm not very sure whether that thing is done for sure. And based on whatever numbers we have, most of the companies are still trading at about 20 to 24 times on a March 17 basis, with clearly some more downside risk to the earning numbers. So I'm still not very sure whether I really want to revisit the likes of a Reddy's or a Sun very quickly.
Okay, by the way, the market is now picking up, not the Sensex and the Nifty, but the mid-cap index. It's up almost 0.7%, and now there are 1,000 stocks on the advancing side. Just to spot a couple of them for you, names like IVRCL, of course, that's a penny stock, but it's up 8.5%, and big volumes on IVRCL this morning. The railway stocks continue to move up higher, so Titagarh Wagons is up another 4%, and big volumes getting traded there as well. And a couple of these other names that you should look at, names like Amtek Auto are seeing good buying. Remember, that was Mr. Tulsian's recommendation as well. So Amtek Auto is up almost about 4% right now. Sanjeev, the space that did very well last month, surprisingly, was the PSU banks. And now, there are some issues getting solved for the PSU banking space. For example, the Dabhol plant has started selling power again. So many banks indicate that perhaps the worst of the asset quality problem is behind them. Would you put money in PSU banking names, the larger ones like SBI, PNB, BOB, etc.?
We already did that, and we took a call in SBI about 2-3 months back and decided to put some money over there. So if you look at the model portfolio, we have about 4% in SBI now, and over the last 2-3 months we have gradually increased the weight over there. I mean, the call was at 240 rupees if you adjust for the value of subsidiaries which are doing reasonably well, especially life insurance business, etc. You take out about 50 rupees. The stock was available at sub 200 levels. March 2017, adjusted book value would be about 170, adjusting for the NPLs. In which case, the company stock was available at about 1.1 times, which is not too bad, I would think. So, if I want to play the PSU banking system cycle, or the improvement in NPL cycle, I would probably do it through SBI. The others have way too many problems as of now. So, I'm just happy, keeping SBI in the portfolio.
All right, Sanjeev, we leave it at that. Thanks so much for taking the time out and joining us. So the Kotak view is that markets will remain range-bound, though there are a lot of triggers to watch for. The Fed, we've got the winter session of the Parliament. The earnings could keep a lid on all that. But let's now go across to Rajat Bose to